Okay, so imagine this, right? You're looking at your investment portfolio and you're thinking about real estate. It's always been the dream, owning a rental property. But then you remember the down payment, and suddenly your wallet feels a little light, you know? And don't even get me started on the joys of being a landlord, dealing with burst pipes in the middle of the night. But what if there was a way to tap into the real estate market, be a landlord, without actually being a landlord? Well, that's what we're diving into today. Share, a company that's promising to do just that. We're taking a deep dive into Allied Venture Partners' investment memo on Share. And this isn't just about one company. It's about understanding a potential sea change in how we invest in real estate. They call it democratizing real estate, which is a bold statement. So let's see if it holds up. First things first, numbers. We're talking about a huge market here.
The U.S. housing market is valued at over $36 trillion. Trillion with a T. And if you focus on the single-family rental market within that, it's still a massive $2.3 trillion. So the potential is definitely there. But traditionally, getting a piece of that pie has meant big upfront costs and a whole lot of hassle. Finding the right property, dealing with paperwork, becoming everyone's go-to for every little repair. It's enough to make even the most seasoned investor sweat a little. And that's where Share steps in. They've created a platform where you can buy shares of rental homes. And here's the real kicker. They handle everything. Finding the properties, vetting tenants, even collecting rent. It's like having a silent partner who does all the heavy lifting while you get to, well, enjoy life. It's pretty wild when you think about it. You get the potential for that cash flow from rental payments, plus the potential upside of appreciation if the property value goes up, all without the stress of actually managing the property. It's not just being a landlord. It's like being a landlord in some parallel universe where everything just works. But what got Allied Venture Partners so excited about this? What did they see in Share that made them want to invest?
Allied has a history of investing in companies that use tech to shake up established industries. They love it when a company finds a way to make something exclusive, well, a little less exclusive. And the real estate market definitely fits that bill. It's always been a bit of a closed club. But it's more than just a good idea. Allied looks for teams with a proven track record, and the Share team has the experience to back up their vision, especially in tech. In the startup world, that's not just valuable, it's essential. It's the difference between having a dream and building an empire.
That's for sure. Experience is key. But you have to admit, timing is everything, right? You got to strike while the iron's hot.
Yeah.
So what was it about the market that screamed opportunity to Allied when they were looking at Share?
Well, remember that whole housing shortage everyone's talking about? It's not just talk. It's a real thing with real consequences. Since 2008, we haven't built enough homes to keep up with demand. And then the pandemic hit, throwing global supply chains into chaos and making everyone rethink their living spaces. Put it all together, and you've got yourself a recipe for one massive housing shortage.
So it's not just that we're not building enough. It's become incredibly difficult to even build, period.
That's correct.
Every time I turn around, there's another story about construction delays or material costs going through the roof.
You're right. The National Association of Home Builders estimates we're short over 5 million homes in the U.S. alone. That shortage puts huge pressure on prices, making it even tougher for people to buy. It's like trying to buy concert tickets the second they go on sale, except the concert is a place to live, and the scalpers are, well, market forces.
It's a seller's market on steroids. And those steroids are fueled by, well, panic and desperation. And it's not just home prices that are going crazy. Renters aren't exactly having a good time either.
You said it. Allied found that single-family home rents have been climbing at their fastest rate in over 16 years. Classic supply and demand, but the stakes are much higher because we're talking about people's homes. When demand is high and supply is low, well, you know what happens next. Prices skyrocket.
It's like someone hit the fast forward button on the rental market and no one knows how to make it stop. And this is where Share strategy gets really interesting. As traditional home ownership, that dream of owning your own piece of the pie becomes less and less attainable. Renting starts to look more appealing, especially for a generation that's already facing an uphill battle financially.
Exactly. Millennials, the largest generation entering their prime home buying years, are already burdened with student loans and a job market that feels like a roller coaster. They're much more open to renting than previous generations, not because they necessarily want to be, but because, for many, it's the only option.
So you've got low supply, you've got high demand, and you've got an entire generation that's more open to saying, hey, maybe renting isn't so bad after all.
Yeah.
That's the sweet spot Share is going for, right? It's all about timing.
Absolutely. Allied probably saw that perfect storm brewing. Remember, they look for companies that are ready to disrupt industries, and Share is right in the middle of this huge shift in real estate. It's not just about making real estate investing easier, it's about offering a solution at a time when the market is screaming for change.
Right, right. It's like they say, necessity is the mother of invention. But let's talk about the team behind all this. Who are the people at Share, and what makes them qualified to navigate this real estate revolution? We've got Andrew Kim as CEO, and this isn't his first rodeo, is it?
Not by a long shot. This is a serial entrepreneur who previously built a digital commerce business that was acquired after only 14 months.
14 months. That's incredible. What does that say about what he brings to the table?
It says potential. It shows he can find a need in the market, create a solution, and scale it incredibly fast. And the fact that he achieved an early exit like that, that speaks volumes about his business sense and his ability to build something investors want.
Okay, so he's got that Midas touch when it comes to startups, but he's not alone in this, right? What about the rest of the Share team? The memo mentioned something about them having strong tech and real estate backgrounds.
Oh, absolutely. This isn't a bunch of people who just woke up one day and thought, hey, real estate is hot right now, let's make a website.
Oh.
They've put together a team with deep expertise in both tech and real estate, which is the perfect mix for a company trying to change how we invest in property.
So they've got the brains, they've got the experience, but it sounds like they've also got something else. Connections. The investment memo mentioned advisors from big companies like Side and Kijiji. What's the significance of that kind of network, especially for a company like Share?
That's a great point. It's one thing to have a good idea. It's another thing entirely to have a network of experienced mentors and advisors, especially in a complex industry like real estate. Side and Kijiji are major players, and having access to their knowledge and guidance adds a ton of credibility. It's like having experienced hikers guiding you up a mountain. They know the best paths, they've seen the dangerous spots, and they can help you navigate the challenges.
It's like they're saying, we believe in what Share is doing so much that we're willing to put our own reputations on the line. That says a lot. But let's talk about the elephant in the room for a second. Competition. Share isn't the only company trying to make real estate investing more accessible. What's the competitive landscape look like, and how does Share stand out?
That's the million-dollar question, right? And you're right, Share isn't alone in this. There are other companies out there trying to get a piece of that single-family rental market. But what Allied likely saw in Share was a unique combination of things. Their tech-focused approach, their focus on a seamless user experience, and that all-star team with a track record of success.
So it's not just about offering fractional ownership. It's about the whole package. The technology, the team, the experience. It's about making the entire process as smooth and stress-free as possible for the investor.
Exactly. Share seems laser-focused on removing the things that have traditionally kept everyday investors out of the real estate game. They're not just simplifying real estate investing, they're making it user-friendly, accessible, and, dare I say, enjoyable.
Now you're talking. Enjoyable real estate investing. Who knew that was even possible? But let's be real for a moment. We've talked a lot about the potential upside, but every investment has risks. What are some of the potential challenges or downsides that Allied might have considered when evaluating Share?
That's the mark of a smart investor, always looking at both sides of the coin. And you're right, no investment is without risk. One potential challenge for Share could be scaling their operations fast enough to keep up with demand. They need to bring on both investors and good rental properties quickly to gain traction, and that can be a tough balancing act.
Like trying to build a plane while it's already in the air, right? You need to make sure everything works together perfectly, or things could get bumpy. What other potential hurdles did Allied have to think about? So they're dealing with a lot, making sure they don't grow too fast, dealing with regulations. Any other potential red flags Allied would have considered?
Well, with any investment in a young company, there's always the risks that the market might not be as receptive as you'd hope. Share's success depends on getting a critical mass of both investors and renters onto their platform. Allied likely analyzed market trends and how consumers were feeling to figure out how much demand there would be for Share's unique approach.
So it's not just about having a great product. It's about having a product people actually want and need. It's about finding that sweet spot where market demand and a good solution meet.
Precisely. And that's what makes venture capital so interesting. Betting on the future, identifying companies that have the potential to change everything.
And speaking of changing everything, let's come back to Share and their big idea of democratizing real estate. What does that even look like in practice? How is Share trying to make real estate investing accessible to a wider audience?
Well, their entire platform is about breaking down those barriers to entry. Real estate investing used to require serious cash, a high risk tolerance, and a ton of time and effort. Share tackles all three of those things head on.
Okay, I'm listening. Tell me more.
First, by offering fractional ownership, Share lets investors buy a piece of a rental property with a much smaller investment than buying the whole thing. It's like pooling your money with friends to buy something you couldn't afford on your own.
So it's like slicing up that massive real estate pie into smaller, more manageable pieces.
Exactly. It makes real estate investing accessible to way more people, even those who thought it was totally out of reach. And second, Share takes care of all the day-to-day stuff that comes with managing a property. Tenant screening, maintenance, all of it. That minimizes the risk and the time commitment usually associated with being a landlord.
So it's not just about affordability. It's about making it approachable for those of us who don't have the time, the knowledge, or honestly, the desire to deal with all the headaches of being a landlord.
Exactly. Share wants to make the experience easier, remove those traditional barriers, and make real estate investing more passive and less of a hassle.
So you're saying I could potentially add real estate to my portfolio with way less money and way less stress. That sounds almost too good to be true.
That's the beauty of innovation, isn't it? It often does seem too good to be true until it just becomes the new normal. And finally, Share aims to give investors clear, data-driven insights. They use technology to analyze potential investments and see how profitable they might be.
So it's not just about following your gut anymore. There's real data and analysis behind these investment decisions now.
Exactly. Share is bringing real estate investing into the 21st century, giving investors the info they need to make smarter choices. They're taking the guesswork out of it.
I have to say, this is all sounding pretty convincing, but let's zoom out for a second. We've talked a lot about Share and their methods, but what does this potential shift towards more accessible real estate investing really mean for the future of the housing market in general? What are the big picture implications?
That's the big question, isn't it? And it's one that a lot of experts are asking. On the one hand, this move towards democratizing real estate investing could make the market more liquid and efficient, making it simpler for people to buy and sell shares of properties.
So it can make the market more dynamic, more responsive to the changes in supply and demand.
Exactly. It could also attract new sources of capital into real estate, which could lead to more development and construction, potentially helping with that housing shortage in the long run.
So it's not just about individual investors. It's about potentially impacting the entire housing market ecosystem.
Precisely. But we have to think about the potential downsides, too. Some critics worry that more investment activity could push property prices even higher, which would worsen affordability issues for those already priced out.
So it's a double-edged sword. Making real estate investing easier could also make housing less affordable.
That's the complicated situation we're in. It's about finding the right balance, and only time will tell how this all plays out. There are also concerns about speculation and volatility in a more open real estate market, especially if there aren't proper regulations and safeguards in place.
So it's not just about making it easier to invest. It's about doing it responsibly, sustainably, right? We don't want to create a new set of problems while solving the old ones.
Exactly. Finding that balance is key. It'll be really interesting to see how Share and the other players adapt to these complexities moving forward.
Well, I think we can all agree things are about to get really interesting in the world of real estate investing. For anyone listening who's ever considered owning a piece of that pie, this is a trend worth paying attention to.
I definitely agree. Knowledge is power, and the more you know about these new trends, the better prepared you'll be for the future of real estate.
That's right. And with that, we wrap up our deep dive into share and fractional real estate investing. Until next time.